So getting a little bit away from the political deadlock for a second, just from your perspective, does privatization, even as a Corker Warner attempt to accelerate privatization, does that actually work in this marketplace?
In this current marketplace, you know, in the aftermath of the financial crisis, it's clear that at least for a couple more years we're going to need a pretty large government footprint. The question is what happens in normal times, and there's a lot of debate around that, obviously. The points I would make are that, one, we haven't really had a government-free housing finance system since 1933. Before Fannie and Freddie existed, we had a very similar model for the savings loan industry, where the government gave these guys federally subsidized financing, just like we do with Fannie and Freddie. They had barriers to entry, a valuable charter that basically gave them a pretty nice little business model. You are old enough to know the 363 rule. You know, you pay out 3% on deposits, lend out 6%. You're on the golf course by 3 p.m. That was that old model. So you know, that we've had that market in place for a really long time. What has been associated with the 30-year fixed rate mortgage, and also I think importantly with stability. So if we go away from that, what happens? And that's the question I think you heard Janice earlier saying that we don't really know. There's a lot of debate. It's very difficult to model what happens if we pull the government out completely. I tend to think that given what we've seen in other countries, you would have an absence of a 30-year fixed rate mortgage, and possibly something like a reversion to what we see in commercial real estate, which is more 2 to 5 year rollover loans, more 50% down payments, and whatever consequences that has for consumers. So I tend to favor some sort of government role.
To what degree would this really affect the long-term landscape of home ownership versus rental and underserviced at the moment? And what are the economic implications of this type of a move towards at least quasi-privatization?
Right, so let's just say that the government scaled back out of what's currently the Fannie Freddie space, and we just left FHA in place, the VA, and Ginnie Mae. What I think you would see is private capital without a government wrap entering into the Fannie Freddie space on very limited terms. This is high credit risk. And so I think they demand mortgage terms that were very friendly to their interests, high down payments, very short terms so they didn't have a lot of interest rate risk, and you'd see a lot less liquidity. So a very small fraction of the people that currently have access to home mortgages would get that access. I think it would also be much more expensive. You look at who the likely players are there. We're talking about investment banks, hedge funds. I think they'd require a pretty high rate of return on mortgages. So I'm thinking 15 to 20% annual. Maybe that's a 15% mortgage.
Wow.
10%, 50. I mean, there's a lot of debate around this, but I think looking at sort of what current rates are is not the right metric. It's looking at what the rates of returns typically required by these types of financial institutions are, and that's anywhere from 10 to 20% typically. So I think that's kind of where I look at things. So the question then is, who finances housing? And I don't know. Rental I think would be a lot more expensive because who finances that? Again, it's the hedge funds and similar groups. So I'm not optimistic, and I guess the thing that gives me pause is the fact that no other country that I know of, an advanced country, doesn't have some sort of social support for either housing or housing finance in a pretty significant way.